Welcome to the Eureka webinar with female Black founders. Joining us, Renee King from Money Earn in Mount Vernon, New York. We are thrilled to be hosting this webinar today about the stimulus package and recovery dollars that are available to small and medium-sized businesses. The exciting part about this webinar is that we hope to even hear from you all and hear how things have been going since the program has been up and running for a couple of days. The guide here is to talk about stimulus, but also talk about some other options. I'm sure many of you have seen the news and the media. There are some challenges. We should just level set that over the course of all of 2019, the small business lending sector gave out $20 billion over 12 months. That's less than $2 billion a month. Right now with the stimulus, they're being asked to give out $350 million from April to June, and it's 3 months. So the system is struggling. And that's not to disparage anybody that's trying, but there are clearly some limitations. So we thought it would be very important to be able to provide some clarity on what program is best for you, and to be able to, most importantly, provide some other options. Because while this is clearly a short-term crisis, hopefully this is a time where you're thinking about how do I really plan long-term, not just for the survivability, but also for the sustainability of the business. So we want to offer this as yet another resource. Hopefully you've had a chance to log into the platform and to be able to see that we have a current, we keep up to date COVID-19 resource center with opportunity and access to grants, to webinars, to content from all across a variety of resources that we source and review to make sure they're actually relevant to our members. Excuse me, so I highly encourage you to visit the resource center. But what we want to do is really talk about what is most relevant for you. And the three topics that we're covering today are grants, which is wonderful because it's free money. Loans, we've got 2 loan programmings coming out of the SBA, and they work together, but they're very different. And what I'm most excited about is actually talk about crowdfunding. And we have a leading expert, Renee, in joining us in doing that. One of the things we want to do is to make sure that this content was not generic, but very specific to you. So please remember to use the chat function if you have specific questions for us, and we will respond at the end. So we took a poll to see where people were in this process, and that actually helped us develop some of the content that we're going to cover. But before we do that and show you how we use that data, we do have a poll for you so that we can level set who's on the call with us. So the question is, rate your knowledge about the emergency funding. So you can check, I'm aware of what's out there and you've already applied, which would be very helpful to us, and we welcome what your experience has been. I don't think I qualify, and hopefully we can dispel any of those questions tonight. And I don't even know what the emergency funding is. And hopefully by the end of today, for sure, you will actually know all the options and all the programs that are available to you. So I'll give you a chance to fill that out. But while we're doing that, I also want to do one other level setting exercise for us, just so we understand what's happening. Not only are we in unprecedented time with respect to this volume of money coming through, but we also have a lack of clarity. I think every entrepreneur that I've had the privilege to talk to this week and coach, I think 50% of my answers have been, it depends. And I know that's a very frustrating answer. But the reality is that what banks are operating under is something called guidance. But guidance is just suggestions, like you suggest your child do their homework. That is very different than rules and regs that says you have to do your homework at 6 p.m. and finish it by 8. And I'm that specific because that's where we are with the stimulus. There is tons of guidance. The rules and regulations are not done. I had the privilege to serve in Treasury under President Clinton, and I can tell you it's a process. So part of this is to really educate you and understand what are the hurdles and what are the opportunity costs, because we have both heard a lot of rhetoric around these loans can be forgiven. Well, they're really grants, and we want to make sure that you're clear about the stimulus and certainly have some other options to move forward. So let's see where we are with the poll. And the results are, I am aware and I have applied, congratulations. I don't think I qualified, let's see if you do, and I don't know what emergency funding is. So for the 44% of you that have already applied, please use the chat function to share what some of your experiences have been, because we certainly want to hear what's not working, and we certainly want to share what is working, because as I talk about this, you'll hear that a lot of things are dependent, particularly for the Paycheck Protection Program, on the bank that you choose. And for those of you who don't think you qualify, the beauty is I will go through the programs and you can decide. And the best part is you'll have an option at the end to really think about some crowdfunding. So let's get started. So the first thing that we want to cover is assessing your needs. And that is really understanding what is the type of money that you need. The one goal, since we are all entrepreneurs here, is we want to make sure you can answer, which is, what do I do from here? Now that I've heard all these programs, how do I move forward? Because the last thing we want is for anyone to be paralyzed by the situation. Excuse me, my mom is 92 years old. She turned 92 on April 3rd, and she said, you know, y'all are fragile. She said, I experienced the Great Depression and World War II. Y'all just have to live through something to become stronger. And she said, but I trust that you all will make it through. So I do trust that we will make it through. And so I want to make sure that we are treating this as a moment in time. It is one data point in a long series of data points that you have the opportunity to achieve with your business. And we want to make sure that we can help you do that. So the first thing is just to really make sure that you understand what your business needs are. And it's a time to actually take a step back and reflect. And that reflection could be 3 minutes, 30 minutes, or 3 weeks, whatever time it takes. But it's an opportunity for you to really assess, what am I learning about my business now that this economic shock has happened? What is it that is being negatively impacted that I need to either course correct or pivot? What are aspects of my business that are thriving? Maybe you had a burgeoning direct-to-consumer play, and now all of a sudden you realize this could actually work out better than having to go into stores. Maybe you thought about going into stores and held off on your e-commerce platform, and now's the time to think about that. Maybe you have both and you've been spending more time talking to distributors, and now's the time to go to your high growth customers. If you are in the business and you have supply chains or suppliers, this is a chance to understand how they're managing the crisis and how it's going to affect you. There are very few businesses that we're all run that don't have a set of interdependencies. And so you certainly don't want to make decisions upon data that you don't have. So this is also a chance to reach out and check in with them, because we are going to get through this, and you want to know what are their plans for course correction and what are they going to do when this is over. And then the other thing I would say is there've been lots of reports out there, and McKinsey put out a very interesting one that talked about a survey they did when COVID first hit, and where people and how people were kind of reprioritizing how they spend money. And obviously it was on groceries and rent, but there were other things that, you know, I was surprised that were still there. And I think some of that will change over time, but it's an opportunity for you to engage with your customers and see how they're doing and see how you can be helpful. And so I would say use this as a moment, not to say, oh, I'm doomed, but what is it I need to do and what is a chance to pivot? I have heard from businesses that typically used to sell in retail locations or venues that have now teamed up and partnered with delivery services, and they're leveraging any outstanding inventory and getting it delivered. I've seen people who used to have no direct-to-consumer presence and now do. So it's really a chance to think differently about your business, and who knows, you may find an even better way to be able to move forward, because as we know, there are businesses like Dropbox and Airbnb that were founded during the last economic shock. This is a chance for you to not commiserate, but get innovative in terms of how you move forward. So once you've been able to figure out what are the aspects of your business that are going to be impacted and what is your plan moving forward, then you'll get a sense of how much cash you actually need. And we know that the typical reserve rate is around 3 months, but not a lot of people saw this coming. And for cyclical or seasonal businesses, you may have just been ramping up. So you really want to be thoughtful around the types of money that you need in terms of grant or in terms of loan, and we'll talk about those, or in terms of crowdfunding, but understanding your options and the cost of that capital. And then you want to understand how much you need. And so one thing to keep in mind is there are lots of grant programs out there, which I'm really excited about. And some of them were already up and running before this crisis happened, and others continue to come online every single day. What you want to know is that check your city and state, many economic development agencies, business-related agencies, chambers of commerce, they're all instituting various types of programs. And it's important that you stay on top of that. And I see that somebody has applied for the one in DC, because the money is limited. So they're basically reallocating funds from other programs, but it is out there and it is free money. You also have private sector programs. And if anybody was tracking and saw the CNBC announcement, Eureka is partnering with Facebook to be able to distribute the grants they're going to give in the United States. So look out for information moving forward. But there's also other companies that we're going to talk about in a second that are doing the same thing. What's important to think about with these grant programs is, what are the requirements? Many of them have residency requirements. Some of them have business requirements. And so in the case like DC, we think DC, Maryland, Virginia, we just kind of roll through. Nobody just pays attention. But for DC, you had to live in the district. It wasn't if your business was there and you lived somewhere else. So just be mindful and make sure that you're reading the fine print and making sure that you qualify. And also be mindful if there are any restrictions on the funds. And that's going to be a theme as we take through these different programs. You don't want to receive the money and think you can use it to pay employees or pay rent rather, and instead it's really only for employees, because a lot of the programs do have indeed very specific requirements that they want you to meet. And so it's important that you take time. And so it's important to understand how long is it going to take to apply, regardless if you're applying for a grant, loan, or doing crowdfunding. I think Renee will back me up on this. You have to understand that everything is an opportunity cost. Anything that takes you away from running your business is an opportunity cost. And just being mindful of this is the way you want to spend your time. And then think about, again, how do you use the fund? How long is it going to take? And there's a couple of other programs out there that I want to talk to you about. And these are some other things to consider. But if you go state by state, there are a variety of programs. DC has the micro grant program. Atlanta has a city program where they put out $1 million. There's also some private sector programs even beyond Facebook. You have, as we see here, Sarah Blakely, who started Spanx, has the Red Backpack Fund, and she's giving 1,000 female entrepreneurs $5,000 in a red backpack because that's how she started Spanx. You have the Essence Pine Sol, which was happening way before you even had COVID, but that's $100,000 that you could win. And then Shea Moisture announced last week they have $1 million fund, and more details are coming out about that. If you live in DC, we took the poll earlier in terms of where people live. These are some programs that list in DC. You begin to see that some of them are general in nature and some of them are specifically around saving the employment. You also have what's happening in San Francisco. Some of them are focused on evictions and making sure that your business still has a place to be. And then Atlanta, where I talked about the city itself put out an executive order. And then you have the entire ecosystem stepping up. So if you're a city that you need help with, feel free to give us a call. Check out our resource center because there are R&D programs out there. Someone just mentioned that Salesforce has a new $5 million fund. So you've got lots of these programs that are coming online. So get excited, get ready, read the fine print, and make sure you're clear that that amount of money that you're about to spend time applying is actually really relevant to you, because each of these programs that we've talked about so far and moving forward are all going to have different amounts that are available to you. And if, for example, you hire somebody to do this package, or you hire somebody to get your documents in a row, and that costs you 15 grand and the grant is only 10, probably not a good use of time. So really be thoughtful about what this is going to cost to you, literally and figuratively. And so continue to stay abreast on grants, and we too will continue to post them in the resource center. What I want to do now is move to loans. As many people have seen, we have the ability to access $350 billion for stimulus. Because I live in DC and the news is constantly on in my house, there's another $250 billion that is indeed possibly going to come to fruition as well. Tomorrow it begins to make its way through. So there's a lot of money that's going to be coming. And so I just want to make sure that people are clear what the challenge is. And we've got some great data coming through around the fact that no need to hire somebody else to apply, because it's actually turning out to be easier than you can expect. And for the Paycheck Protection Program, which we're going to talk about, you should know that it is very much about the bank's decision. So if you remember, we talked about this volume of money moving at a velocity that has never been seen before through a system. So you have the economic injury disaster loans, which are a modification of the existing SBA disaster loans. So if you were ahead of the game, which I'm sure some of you were based on that 44% response, and you applied for the disaster loan before this one came online, apply for this one. It's a separate program and you can apply for both, and you apply directly to the SBA. The Paycheck Protection Program is specifically designed, what it says, preserve paychecks. It is about protecting workers, and those workers luckily have now expanded to not just be full-time employees, but it could be part-time, independent contractors, as well as sole proprietors. So These are versions of existing programs that have been expanded to reduce some of the barriers and friction that typically existed to try to get more money out faster as we move through this process. So these are the two programs that we're going to talk about. Let's talk about the disaster loan. So there's a grant component and there's a loan component. In all of these programs, there's a set amount of money, and once it's gone, it's gone. So I do encourage, if you haven't applied, to apply soon, because we are estimating that the grants in particular are only going to be available to a limited group of folks. But the idea is that you go online, you go directly to the SBA, there's a portal, and you apply for the grant. Now, originally, it was 3 to 5 days, as Kendrick just mentioned. I tested the system today. Now it could be a week or more. So I'm assuming now we've moved to 7 to 14 days. If people recall, the first day this program was announced, the SBA website crashed. So you begin to see the speed and pace at which this is happening. So we're all human, and technology is only as good as how it's coded. So there is a little bit of catch up. And so again, that's why I say it depends. All of this stuff should be taken with a grain of salt and really think through, run your cash flows before you decide which one you're going to run after. But the idea is that these are programs for businesses that have less than 500 employees. And again, the 3 to 5 days has changed, as I saw today. But again, it is still a program that is available and rolling through. What they're asking for is that, unlike other programs, when you move to the loans, you don't have to provide personal collateral. So you do have to, if you go over a certain amount, have to share your credit score, but you don't have to provide collateral. So there's some adjustments that have been made. But these are a sample of the documents that are being requested from the SBA. And as someone said in the post, that they didn't need somebody to prepare the application. I completely agree with you. But what I'm finding when I'm talking to individual entrepreneurs is some of them don't have their taxes done. Some of them don't have their statements. And so you have to decide, is this the right time to play catch up? Because in some of these programs we go through, it is going to be important to be able to figure that out. When we think about the loan program, as I mentioned, no personal collateral required. You can also already have debt through another program. So if you apply for the disaster loan program, if you already have another SBA loan, it is completely fine. And then the funding, we have to remember, is specifically for payroll, for rent, for mortgage, for health benefits, anything that is core to the business. But unlike the Paycheck Protection Program that I'm going to discuss, there is no formula that puts a cap on any of those expenses, which is a good thing. And then the last thing here, it says your loan can be forgiven. I cannot say enough. Do not assume your loan will be forgiven. Let me say it one more time. Do not assume your loan will be forgiven. You will have a grace period of up to 6 weeks to pay it back. And if it is not forgiven in that time, you will be expected to repay. And I will talk about what some of the requirements are in terms of that forgiveness, but please do not assume, because the guidance says loans can be forgiven between 75 to 100%. Not every loan will be forgiven for 100%. So you want to be really careful about that. And again, I'm going to come back to that when I cover after the Paycheck Protection Program. So with the Paycheck Protection Program, as I mentioned, this is the loan program that's going through your banks. And this is also part of the problem. The way the guidance and legislation was written, it's only going through existing 7A lenders, and that's not every bank. So when you hear, I'm mad at my bank, they didn't have it, they're not ready, it is not required to participate. And because the rules and regs are not done, many banks have decided not to participate because they didn't want to run the risk of not getting paid back because the interest rate is 1%. And let's be clear, we can't live and do financial lending on 1%. So the spread is actually a disincentive to the banks, not to mention the lack of a guarantee. So this is a $350 billion program. You can get up to $10 million. The interest rate did just change because the financial institutions lobby, so it's a maximum fee of 1%. And the dollars are calculated as basically 2.5 times your payroll between February and June, particularly for your contract employees. Now, again, let me say, everything I'm telling you The banks have the right to make their own adjustments. So this is a guide for you to determine what's the best path forward. So you can call me back if you want and say, well, that's not what happened in my bank. And you will probably be absolutely correct. And I'm not going to argue with you, because every bank has the right to make their own adjustments because they have to underwrite and service the loans. They're just getting the money through the SBA. What's important here and why that calculation on payroll is important is because 75% of the dollars coming through the Paycheck Protection Program have to go to payroll. And it has to be used during the 8-week period of February to June. It also has to sustain the same number of employees that you had at the end of 2019 during this period. So if you had 5 employees and you laid off 2 and you want to bring them back, awesome. Or you want to hire new people, awesome. But if you get this money and you then report back that you did not maintain 5 employees, then that is a reason why your loan will not be forgiven. If you use more than 25% on non-payroll expenses, remember 75% is payroll, they have the right to say your loan cannot be forgiven. So it is really important that you read the fine print and do not treat these as forgivable loans, because that is not guaranteed. The other piece here is that when you fill this application out, on some applications, you will have to certify that these funds will be used for ongoing operations. Well, ongoing operations has not been defined. So you want to be careful, because after the loan has been processed, and if you get it, wonderful, but you may subsequently be asked for additional information. So this is a list of things that, again, may vary by bank. But the key thing there is the government has the right to ask for 3 years of past financials, and they may come back for more, particularly when it comes time to determine if your loan should be forgiven. There's no cost to apply. As I mentioned, the expenses have to cover the 8-week period of February to June, and it can be forgiven. It is not automatically forgiven, with the priority and focus being on payroll. The big thing here, which typically has not existed in the SBA world, is that these funds are eligible for sole proprietors, independent contractors, and the self-employed. Now, here's what I would say. If you have a company and you have independent contractors who solely work for you, but they're still independent contractors, then I highly recommend you include them in your payroll, because you are their only source of income. If you have an independent contractor who maintains other employers in their portfolio, they then can apply on their own. The same thing as sole proprietorship. But what you don't want to do is have people duplicating applications for the same revenue to a household. So you want to coordinate with any independent contractors that you have working for you so that you're not double counting. But it is important to say that for independent contractors and for self-employed individuals, if you have laid them off, they can apply for unemployment, and they can apply for the loan, and you can include them. And if you are given the loan, then obviously you have to stop and report that on the unemployment benefits. But this is an opportunity where there are some urgent stopgap measures to make sure that people don't go through life without a paycheck, which we know is pretty significant. This is an eye chart, and I apologize, but it's information that I wanted to make sure you had, because you will get this webinar at the end. Sorry about the typo at the bottom, but the key is that there are tax documents required. Nobody's going to look at them, nobody's going to critique them, but that is the basis upon which the bank is making its decision around how much to loan you, along with your self-certification. So having documentation on who you've paid, rent you paid, mortgage payments, all those kinds of things, just be prepared. And for those of you who have actually done fundraising before, this should not be a big deal to you, because it's somewhat analogous to your data rooms that you would have for outside investors. For those who have outside investors, please, please, please check the affiliation rules. I cannot even begin to add that to this webinar, because it's extremely complicated if you are a venture-backed company. There are a series of resolutions and permissions and concessions in some cases that your investors have to make, or you have to decide to make. You have to engage your board. In some cases, you need a lawyer certification. And that's all wonderful if you can afford it. But again, be mindful, if you're a venture-backed company, check with your venture capitalist and check with your lawyer. And here's what the key uses of the funds for 7A. Remember, 75% has to be those first 2 bullets, payroll and group health benefits. Everything else can comprise 75% of the loan. And then again, these are just further examples of the type of application requirements. Again, caveat, it will vary based on bank. So things to think about, and we want to make sure Renee has her time and then we'll answer questions. But things to think about is it worth the time? And I'm looking at the chat and some people said it only took them a few minutes, and luckily the applications range anywhere between 2 to 3 pages. So go for it, right? In some cases you may have nothing to lose. Be mindful though that if you get it, do not assume that it is a grant. I know some people are frustrated. Well, how come I can't be a new customer? Because it legally is not possible. If you are in a lending relationship, there's something called KYC, know your customer, and that is being enforced. So the banks have to know who you are. So in some cases, banks have every right and requirement to say, do I know you? Do you have an account? And you should know that some banks, if you haven't applied yet, so take the time to make the phone call or go to their website. Some of them are also requiring a prior lending relationship. So it's not just good enough that you bank with them and they have your money, but have they actually made a loan to you before? And that makes sense because of the unclear underwriting criteria. They need a basis upon which to make the decision. And then these are just, again, some questions to consider. So going back to what the young lady responded on the chat, I'm not suggesting that you pay somebody else to do the application. But if your taxes aren't in order and your accounting statements aren't in order, and this is the time you think you want to do it, just make sure you have the time and the funds to do that, to be able to go out and get this money. The other thing is to make sure that if debt is right for your company. As some of you know, if you're not venture backed, obviously, you know, venture backed companies, growth companies, there's an element of subsidy, there's an expectation of loss. If you are not venture backed or have some kind of investor, then you're a company that is living on profitability. And if you believe at some point in time, after you run your cash flow statement, hint, hint, that you will not break even or make revenue by the end of this year, and then you have a loan that possibly is 25 to 50% of that loss, you need to think about that because now your balance sheet is going to be upside down. So I've heard some webinars say, go get the debt, build up your credit score. But I think we all know if you are in the red, it's pretty hard to build up your credit score. So really start to look at some of those debt to asset ratios to make sure that taking on this debt is not going to have negative consequences when you go out and possibly get new funding in 2021, because again, this too shall pass. So I hope that that was somewhat helpful. I know it was fast. I know it was a lot. We're here to help. We have a resource center. But in the event that some of those don't work or you don't qualify, then it's okay because we certainly have other options available to you. And I'm thrilled that we actually have Renee King, who is here to talk about what is possible for you, and what is available to you from a crowdfunding perspective. So Renee, I'm gonna pass it over to you, and I'm about to turn over mouse control as well. Thank you for your patience.
Thank you. That was amazing. And also like as real into the truth as usual, as Melissa is always. So thank you. Do I have mouse control? I do. Let's see. No. Okay,
I did provide it, but I might have messed up. I'm not technologically savvy. So I'm happy to click them through for you, and I apologize for that.
Wait a minute. Yeah, I don't think I have it.
Okay, so if you don't mind, I apologize to the group. If you say advance, I will advance for you. My apologies.
So this was awesome information as usual. So while we're going through this uncertainty with all of these SBAs, the loans and all this stuff, and you're trying to figure out navigating what's going on, and with our economy in this crisis, several forces are pretty much aligning over the coming months that's probably going to result in more businesses leaning on crowdfunding. So we wanted to highlight what it is, how you can unlock it, is it worth your time, should you go ahead and do it? We wanted to talk about those things. 2020, I think probably is going to be a big year for crowdfunding. So access to capital for startups and I think for small businesses are going to slow through the rest of the year. This happened in 2008, will probably happen now. So if you are navigating your capital journey over the next few months, I want you to consider unlocking crowdfunding to help you bridge these capital gaps or obstacles you may be facing. Next slide, please. So I love reminding or making folks aware that President Obama is the reason we even have crowdfunding, and he signed this Jobs Act into law back in 2012 because he knew like startups and small businesses need access to capital, and they need access to get this capital from larger amounts of folks, typical people who are not accredited investors, just your regular Americans who want to support the entrepreneurs they love and believe in. So crowdfunding is a great tool to democratize your access to the capital you need to help you start and grow your business. Next slide, please. It's not an easy thing to do. Crowdfunding isn't easy, but it's also not rocket science. And similar to like these SBAs or grants and any business capital, there are hurdles and opportunities and opportunity costs. The biggest hurdle I would say right now in terms of crowdfunding is the fact that we are in a crisis. So there's a level of sensitivity and empathy paired with consumer need required in running a successful campaign right now versus you choosing to run or launch your campaign in like a few months, okay? In addition to that need, the other hurdles is you need a strong crowd. A strong crowd is like a large engaged number of folks who believe in you. They believe in your product. They want to support you. They want your product or service. They want to tell their friends about you and your product. Think bigger when you're thinking about this crowd. Don't just think of your immediate friends and family or your network. Think your networks, think your current customers, future customers, organizations you're a member of. Think way bigger. You should also need to be comfortable with asking these folks to support your campaign and asking them for money. And not just asking them once, you need to be comfortable asking them multiple times. You're gonna ask them via email, phone calls, DM, text message. So if you're a person who takes it personal, if you ask that first time and that person doesn't go ahead and contribute or support your campaign and you don't wanna ask them again, crowdfunding is probably not for you. 70% or more of your contributions will likely come from that crowd that strong crowd that you drive to your campaign. Many platforms do have investor or backer bases that will share your campaign. They'll share your campaign with those investors, but do not count on their base to bring in majority of your campaign funding. You still need to be the active driver of getting folks to that page and getting those folks to contribute and invest. The other thing you want to think about is if you want to crowdfund right now, if that is the option that you want to take to secure some capital to help you bridge whatever gap it is you're going through, if you want to start it right now, you want to think about if your product is a Corona or Corona adjacent product. And I want to break that down. Like consider this range to be like, it could be a business that's testing for or curing Corona, to local restaurants that have closed, or a barber or a hairstylist who's like loved by the community, and the community is so eager that they can't wait to like break social distance to get back to your place of business, right? So you could be specifically solving for something that's COVID related, or you could be a need that has developed, right, around this center. So think about that. Don't think you just have to be solving for that. If you fall in one of those categories or within that range, right now is a good time for you to crowdfund, and you can go ahead and run a solid campaign that's still empathetic and sensitive to the climate. You want to also think about, can you commit 45 to 90 days to prep your campaign? Can you ship your product, service, or reward relatively quickly? People, if you do a rewards-based crowdfund, they're going to want their stuff relatively quickly. And can you wait 45 to 90 days to receive the full amount of your funds? Next slide, please. So opportunity costs differ amongst the types of crowdfunding and the variety of crowdfunding platforms, and I'm going to go into the different types. In deciding to crowdfund and what platform you choose, you should consider, do you want or need zero to low interest capital? Do you want to give up equity in your company? Do you have time to commit to running your campaign? Can this campaign be a good marketing opportunity or a customer demand building opportunity for you? Are the platform fees worth the work or time required to run the campaign? What are the costs to prep and launch your campaign? The cost of manufacturing and delivering your campaign rewards? Think about platform raise minimums required for you to get the capital that you raise on those campaigns, okay? Next slide, please. So when I was talking about, there are 4 types of crowdfunding. There is donation, there is rewards, there is lending, and there is equity. And there's a plethora of platforms out there, different sites. You have Kickstarter, Indiegogo, Republic, Fund Black Founders. You have different types, different platforms, and these are the 4 types in general. Depending on where you are in your journey, you can be a great candidate for one of these or all of them, right? For example, you might be just starting out and interested in raising debt or equity-free capital. Then rewards or donation is right for you. Maybe you have been in business for a while, you have consistent revenue that can qualify you for a lending crowdfunding campaign. Also know you can mix these. You can do multiple campaigns, you just don't run them at the same time, okay? Important thing to note, generally speaking, when it comes to equity crowdfunding, it is strongly recommended that your accounting and your legal team should be in the mix of helping ensure you and your company remains compliant. Let this table serve as a general guidance, but I encourage any and all of you to reach out to Fund Black Founders, and we can help you assess which platform is a right fit for you and your business needs. Next slide, please. So at Fund Black Founders, we're a rewards-based crowdfunding platform. So in exchange for contributions or donations to your campaign, you will give backers a reward. Maybe it's merchandise, beta access to your app, pre-sale of a product, or you could also do no reward at all. They just contribute and they get a thank you. The difference at Fund Black Founders is that we help you decide which platform is a right fit for you, whether it is us or if it's another platform. We support you via your campaign strategy, culturally relevant coaching. We also offer low platform fees. Right now we're at 3%. You keep whatever you raise on Fund Black Founders. There are no minimums you need to meet, and we don't do the all or nothing funding that you see at other platforms. We also do rolling fund dispersal, which is really helpful for businesses who need this cash now. So you don't have to wait 45+ days or until your campaign is done to receive the funding. As soon as Stripe receives it and releases it, it's yours and it's in your Stripe account. Next slide, please. This is our traditional campaign roadmap. So ideally you can run your campaign from start to finish, like from 45 days of prepping through launching your actual campaign. Of course, if you have like a COVID-19 impact or a COVID-19 adjacent product or service, we would expedite this. But this is a traditional campaign roadmap that you can expect if you wanted to go the crowdfunding route with Fund Black Founders. Next slide, please. We also wanted to highlight another platform during this time so you can get the difference or you can gauge the difference. So Republic is an equity crowdfunding platform where contributors to your Republic campaign gain equity stake in your business. And the difference for them is that their average campaign size is around $500K. You can get your fund dispersal, 50% of your fund dispersal during your campaign, and the balance you'll receive at the end of your campaign. They have a large investor base that they do share your campaign with. There are onboarding costs. This is typical of equity crowdfunding platforms. They do require onboarding costs such as your financial prep with your CPA, your Form C filing with your attorney. Republic also does marketing efforts for your campaign. They do have a minimum raise requirement, and they have post-campaign fees. So I like to just show you this, both of them, to understand in detail like what category or what type of business you are, where you are in the stage of your business. As for some businesses may not be a right fit right away for Republic. Maybe they need to do a different type of crowdfunding, and as they build and get more customers and start to grow their business, then they can become a right fit for Republic. But there's different stages of crowdfunding, so don't rule it out. There's all different stages for all different stages of entrepreneurs. Next slide, please. And the Republic campaign roadmap runs like you can decide from, I think it's about, you have 1 week of diligence and selection, you have 3 to 6 weeks of onboarding, 4 to 12 weeks campaign goes live, and then you have your post-close and you go into their alumni community. So it's a little bit longer, and they definitely do a due diligence and selection process to make sure that you're a right fit for their platform, and also that all of your business is in alignment with all of the legal stuff that they need in order to run this legally. once again, sometimes this can be a bit overwhelming. And I am a resource in the Eureka community, and Fund Black Founders is a resource. Let us help you navigate in finding the right crowdfunding option for you and your biz needs. Do not discount crowdfunding. Like right now, as things are really uncertain, and as you're waiting for the SBA, you're waiting for your payroll protection, the paycheck protection to come through, you're waiting to figure out all that stuff. Now's a great time to just get on a call with us or reach out to us to see, well, should I go ahead and explore the crowdfunding route? What do I need to prepare? And is this a right fit for me? I definitely see that this year is going to be a big year for it. There's also some new changes that are going to come up in the crowdfunding regulations that are going to make it a little bit better for entrepreneurs to take advantage of more parts of it. So just get prepared, guys. Like it's a great alternative that you should not discount. In addition to, don't discount yourself from the SBA loans, and don't discount yourself automatically from the payroll protection program. Don't discount yourself automatically from crowdfunding. That's it.
Awesome. Thank you, Renee. And I have been tracking questions in chat. So I've told people to contact you directly to be able to ask questions. If you want to contact any of us, you can reach out to us. We also encourage you to join the platform. Eureka Help is the code. It's free. We are on that. Just hit us in chat. We literally respond to you. You can put your questions in the feed group. And then, excuse me, if people have very specific questions, you can hit me on chat, or Kristen is on this call right now. Anyone who joins gets a free mentor hour. And if people have very specific questions about this program, then hit me up and I'm happy to make time. I have spent the majority of my week talking to entrepreneurs. Many of you have said which program is best for me, and it's hard to say. And again, don't shoot me, but it truly does depend. A couple of questions in case people aren't tracking. We had a question about churches. It's important to know that this is open to nonprofits as well, and it's open to churches. Religious affiliation is not a barrier or a requirement, so please do that. Again, we were considering crowdfunding as we are a salon, but was discouraged because so many of our counterparts and competitors were going directly to GoFundMe. That's not what we wanted to do. So Renee, I'm gonna turn that into a question if I can, because I will say I have been, since we've been working on this, pleasantly surprised that so many customers of a variety of places are reaching out and saying, what can I do? And some people have started saying, you know, I've created gift cards, kind of pre-buy gift cards. But I guess, what would you say to those folks in terms of, you know, versus a GoFundMe page and the value of something that's very short-term, of the value of really having crowdfunding that my sense is, learning from you, has some kind of continuum momentum behind it?
So I would say, I understand the stigma that I think that some business owners feel about going the GoFundMe route. Completely understandable, because GoFundMe really is geared towards more so if you are in like your house burnt down, or like you always hear about it's something like it's a medical need or things of that sort. So I completely understand that. But you also have to understand, like, there are other platforms that do the same exact thing as a GoFundMe. So there is Fund Black Founders, there's Kickstarter, there is Indiegogo. There are all these other platforms that do the same thing. They have different terms. Be mindful of that, because I know Kickstarter or Indiegogo does all or nothing. Fund Black Founders, we don't do all or nothing. But for your business, especially for that beauty salon, your customers want you to be around. They really want your business. Like they want to come out of social distance and go get their hair done or do whatever it is. So if gift cards are working for you, that's okay. But when you want to scale it more and you want to be able to reach a bigger audience, and you want to like really show that you've done the work in putting together a solid campaign of showing like, this is what my business is about, this is where we're going, this is why I need your support, then you can scale it bigger than just getting one little gift card, right? And people want your business to be around. So give them that opportunity. So having this like solid crowdfund campaign page is a great way where you could just drive everyone. They can easily share this with folks. They can get, you don't even have to do the whole gift card process. It's just one page that just lives in terms of branding your company, marketing your company, and giving your customers the opportunity to help you stay in business. They understand there is a crisis going on, and they don't want to come out of this crisis and not have their trusted businesses and services that they loved around. So give them that opportunity to support you.
And that's a perfect answer because a couple people have said that gift card thing would probably kill their business. We have a question from Carl that says, would a business currently preparing a Form 1023 for nonprofit status qualify for crowdfunding?
I am not sure what say that again, the 1023.
It's basically he's applying for nonprofit status. So would he qualify for crowdfunding?
Yes, you would.
Okay.
And if you are a nonprofit, there is another platform that I would probably put you towards. But before you become a nonprofit, you are totally fine on all these other platforms.
Gotcha. And Chandra, I don't know where you are, but you are killing it, girl. She said for beauty salons, ask for down payments for first dibs on appointments once you start in person. You know it's going to be hard to get on those books, so I love that idea.
That's great. That's great. Chandra is killing it because that's a great reward. So when you're thinking about what are you going to give as a reward strategy, perfect reward strategy that people are going to like clamor for that. So you can do a nice price for that and give that as a reward for your crowdfunding campaign.
Yep. So a couple of other questions. I'm an independent contractor. What should I do? I'll let Renee talk about what kind of business you have to be incorporated in for crowdfunding, but independent contractors do qualify for the Paycheck Protection Program. You would just qualify as yourself. So you can certainly go ahead and apply.
For rewards, donation-based crowdfunding, you don't even have to be incorporated as a business to crowdfund. Okay, that's the one thing that's amazing. There's no barriers on that. For equity and debt, yes, you need to be incorporated as a business, and there's other regulations that they require, other documents in a line that you need to have done for you to be able to run one of those campaigns. But for rewards and donation, you do not need to be incorporated at all.
We have somebody who asks, I have an LLC, but I've been doing most of my things off the books. Do I qualify? So for the loan programs, I wouldn't say you don't qualify, but if you use the deck that we will send out afterwards as a guide of some of the materials, you would need to at least be caught up to date in terms of being able to verify what was lost. So you'll have to be able to show revenue and expenses for 2019 so that they can assess what hardship has been accrued. I don't know what financial documentation, Renee, you'd be looking for from a crowdfunding perspective.
For the person, could you say the question again? I was reading other people's.
Well, so they run an LLC and they've been doing it off the books. Good for them. And so I don't know, my ignorance, and I apologize, what financial information is required when you enter into a crowdfunding campaign?
Okay, for rewards and donation, you do not have any of those financial documents that you need to submit in order to run that. Equity and debt, yes. Okay, there's different ones. And there's levels to that too. Like there is, for example, Kiva is a debt platform. You could have very bare minimum financials and maybe qualify for like $1,000 loan, right? And then you may need a lot of financials to qualify for more of a loan. So generally speaking, rewards and donation, you don't need all of those qualifiers. You don't need all that documentation. And when it comes to debt and equity, you need all of that stuff.
Awesome. It looks like, I'm happy to say, we have successfully answered all the questions. But I will want to remind people, one, the recording will be provided. So excuse me, please be on the lookout. We have another question for equity crowdfund raising. Do you need to have your financial statements done by, oh, she's telling us, Chandra knows, boy.
That is correct.
Equity, you need to have your financial statements done by a CPA and must be in GAAP. So Renee, talk a little bit about, or can they contact you, I guess is even better to understand. I know in the slides you walked through different types, but in light of what's happening and what I talked about in the loan programs, do you have an opinion on whether or not people should be going down the debt or equity crowdfunding platform right now in light of what's happening?
I think my opinion on it is that if you do have your financial statements done properly, right, and you have, I like rewards and donation based for businesses that are still trying to find product market fit, all right? You're still trying to establish yourself and you do not have all of these things done, as for like, you don't have your financial statements done by a CPA, you don't have, you're not practicing proper GAAP accounting, right? I like that subset of crowdfunding for you. Equity and debt is when you are further along. Debt crowdfunding is the same thing as you taking a loan. You do have to pay it back, and they do want to look at things like your credit score. They're going to look at your revenue, your monthly revenue that you're bringing in to qualify for this loan. In equity crowdfunding, these things, in order to get your financial statements done, in order to get your legal preparation done, it does cost money to do that. It's on the range of like $3,000 to $12,000, and that's in that chart that you can see. So if you want to run one of those campaigns, just be mindful that it's going to cost you that amount of money for you to just get your documents in alignment for you to qualify to get on one of those platforms. So there's a hurdle of the money that you're going to need to run the campaign on the equity and the debt side. So I would recommend, if you are not interested in like taking on all of that and going through like redoing your financials and having like a whole legal team looking at things, I would recommend you go the rewards and donation aspect. If you have that already done because you've already raised, right? You've already done all this stuff. Like you said, you have this in your data room, then equity is a way to go. Like there is a lot of successful stories that I see going on, or successful startups and founders doing really well on the equity crowdfunding platform. So that's a perfect opportunity to go that side too. But I do recommend, which I talked about this a little bit before, if you do go the equity route, I know a lot of the platforms, they tote it as like, you could just use our out of the box, like legal documents on our out of the box, in the box, or you call it out of the box. Is that how it's called? Out of the box, like whatever, software in a box type systems. You can use all of our legal documents and just plug in your stuff and you'll be fine. I will tell you, you want to have your legal and your accounting team review all of that stuff just to make sure everything is okay. Like that's general, that it's okay for like their platform folks, but you want to make sure it's okay for how you've structured your business and what your future like investment strategy is, funding strategy is, things of that sort. So just, you want to still have your own folks looking over things.
Yep. So I'm watching the time, and it looks like we have a brief little lull. So I would say just double checking if there's any last minute recommendations. I would say for the grant program, be diligent, be on the lookout, check our resource center, check lots of resource centers, read the fine print, make sure you're clear about what's required of you. And I wish you much luck on the grants, because free money is always good money. When it comes to the economic injury disaster loans and the Paycheck Protection Program, just make a decision if it's worth it and understand the implications. I would say there's nothing wrong with applying, because you want to get it in, and then you always have the right to decline. But you want to make sure that you're making the right business decision that is useful and supportive of your business in the long term, and not just trying to cover what's happened over the past couple of weeks, because again, we will come out on the other side. And I don't want to have businesses who've inadvertently had a negative impact by some of the decisions they made. You can apply for both programs, so apply for them both. In some cases, I've told people to apply for both because they're relatively high revenue generating businesses with significant cash burn, and their expenses, they can justify the 75% payroll expenses, but they have mortgages and others that are a little higher. And so if you remember the Paycheck Protection Program, one way to look at it is you can use that to cover your payroll, and the disaster loan can cover some of the other approved and acceptable expenses, but it doesn't have to be, again, aligned to a specific amount of payroll. And the final thing is, let us know how things are going. If you're on the platform, let us know what's working. Let us know what's not working, because we want to be able to share that information with the community. Renee, what are your kind of last comments?
Reach out about the crowdfunding. Any questions you have about crowdfunding, you can find me in the Eureka community, and you can also email me at info@fundblackfounders.com. And it doesn't matter what type of founder you are, and you do not have to necessarily be coming on our platform to run your actual campaign. Reach out to us and we can help you strategize if crowdfunding is a right fit for you, which platform is a right fit for you, and what next steps you should take.
Yep. Awesome. Well, I want to thank you all for joining us, because we are pretty clear this was an opportunity cost for you. So really appreciate you taking the time. Hope to see you on the platform and in the community. As you can tell, we are here to help, and be on the lookout for the slides, and feel free to share and let other people know how to make the best decisions for their businesses, not just for today, but for the rest of the year and hopefully for a much longer time. Thank you all. Have a wonderful evening.
Thank you.